Hello, I am Jessica Yule, the Chief Financial Officer of Royal Dutch Shell. Today we announced our third quarter 2017 financial results, and I'm pleased to update you on these. Shell had a strong third quarter 2017 with earnings of some $4.1 billion on a clean current cost of supplies basis. Compared to Q3 last year, we saw higher earnings in all business segments. Cash flow from operations was around $7.6 billion, with free cash flow of $3.7 billion at an average Brent price of $52 per barrel. Over the last 4 quarters, we've generated $40 billion in cash flow from operations, excluding working capital. And for the 5th consecutive quarter, our free cash flow more than covered the cash dividend. The competitive performance is further evidence of Shell's growing momentum and strengthens our firm belief that our strategy is working. Amongst other portfolio highlights this quarter, in upstream, production started at the Barra Phase 2 project in Nigeria's Niger Delta region. Peak production of around 175,000 barrels of oil equivalent per day, of which Shell's share is 30%, is expected in 2019. This startup is a positive step for Shell's global gas business, as additional volumes to existing plants like NLNG continue to strengthen the resilience and competitiveness of our supply portfolio. In downstream, as part of our retail growth plans, we opened our first service station in Mexico. As the 5th largest consumer of gasoline in the world, Mexico is an important and growing market, and if market conditions continue to develop at their current rates, Shell Retail plans to invest around $1 billion in Mexico over the next decade. We hosted a chemicals investor briefing a few weeks ago to highlight the strength and potential of this business. Shell has had solid performance in chemicals over the last 5 years, including a record quarter in Q1 2017, with $650 million in clean earnings in the third quarter. Moving back to the group, overall we continue to drive our 4 performance levers to manage the financial framework: divestments, capital expenditure, operating expense, and new projects. These levers are adding significantly to our cash flow. On a 4 quarters rolling basis, we've generated some $27 billion of free cash flow, including around $11 billion of cash proceeds from divestments. To date, we have completed $20 billion of divestments, including the sale of our North Sea and Gabon assets completed this week. We are on track to meet the target of $30 billion of divestments between 2016 and 2018. We are demonstrating good delivery against our 4 levers, and I want to further strengthen the momentum with a strong focus on performance management, simplicity, and costs. This is about transforming the company for the future, more value and bottom line focused, and being nimbler to drive change and improvement across all businesses. Thank you for watching.